All right, that was kind of a weird day, sort of the least expected outcome, to be honest. If you had told me Nvidia was going to be up 10%, of course, you kind of would assume the market would be up too. The fact that we rallied Nvidia but then sold off everything else does give bears a morsel of hope here. Now, let's not get too extended because we just have been at highs and we've been cranking out gains, and the bounce back from April was powerful. But we got a reminder that there are some issues still. So nothing changes on the risk radar right now. Lights are green for risk in the stock market, and I think bulls generally for bonds are losing some steam, but nothing too dramatic just yet. Let's look at a few charts on what needs to change though, and if we are going to get maybe a little bit deeper of a slide. Would not be surprised if we're soft tomorrow after a little bit of a wake-up call here today. Firstly, though, here's what's generally good is that when the stock market doesn't do what semiconductors do, it generally doesn't last. So SPY with the 5-day correlation to the semiconductor group. This is what's going on right now. Very rare to see this type of departure when you've got chips actually holding in. Today's move, obviously, for the broad stock market is very rare. Usually when chips are up, the stock market's rallying, and it usually doesn't last very long if the two get disconnected. They're the most important group. So generally speaking, it's probably a blip. So how do we know if it's not a blip? How do we know if it's actually something a little bit more dramatic? Keep in mind that the VIX too was just begging for a spike. I mean, this just collapse in VIX is crazy here over the last couple weeks. Look, it was impressive that we were able to come back out of the April slump, but VIX 11, I mean, come on, let's be real here. We've got way too many problems for VIX to be 11. It doesn't need to be 20. It doesn't need to be 30. We're not in dire straits by any means. We saw good economic data. The economy's firm, but the entire narrative around the Fed is still very much a little bit optimistic. The idea here that we were going to get this like constant Goldilocks type of situation, cuts, the market keeps trying to do that. The FOMC minutes told us we're not going to get the cuts. So even just the Fed narrative alone, the disconnect between reality and what so many bulls have been wanting, I think deserves something above a VIX 12, okay? And I think that did come home to roost here a little bit today when we got the PMI above expectations. So you kind of just needed a pop in VIX. It was a little bit ridiculous to be down there, I think. I really wouldn't expect sub 12 VIX to be sustainable whatsoever in an environment where we're still dealing with sticky inflation and questionable economic outcomes, a consumer that's been pricing down. Like, come on, things aren't bad out there, I get it, but they're also not like VIX 11. The other thing, too, is that there's just been this massive disconnect in the AI narrative, too. Like I wrote yesterday and talked about yesterday, the financial characteristics of the semiconductors after Nvidia drop off a cliff. And so today to see Nvidia rally and do really well and show amazing numbers and the rest of the group do poorly, basically aside from TSM, that kind of makes sense to me too, frankly. We need to have a little bit of coming to reality here. There's like 40, 30, 50% gains in semiconductors that are still getting dragged by old legacy products that don't have a competing AI product really yet. So I think that also too is a little bit of a wake-up call that just we were getting a little bit asleep at the wheel in some of our rosy optimism around the macro with the Fed and the micro on the semiconductor trades. Does it mean we need to fall apart? No, but it probably means that we've been a little bit too one-sided. Here's the other thing too. It's a reminder that the equal weights and the broad market is a different story. Look at the rejection here in the equal weight compared to where we were at the highs. So I think that's notable. This is a big sell-off here in the equal weight. And I get it, most investors are not thinking about this. They're parked in the index funds. But this is telling you that bears actually do have a little bit of a chance here to get something going into the weekend tomorrow. Let's see how we do with durable goods. It's clear the market's still doing the good thing is bad thing again, which is as silly as I think it is, does mean that we've got an imperfect bull case after today.